Just having a look around the charts again. Here we go. It's 10:34 on what are we, Wednesday morning and that. So Asia session's just underway. So start off with the Aussie. Saw a bit of quite a nice sort of little recovery from the lows during the sort of US session here overnight. So I mentioned yesterday that we'd be looking for these sort of deeper sort of pullbacks. If we sort of get this relined up here. We can see here it's pretty much sort of like come down, clipped this 50% retracement, and that was a nice little long wick there. And it's really sort of just, it hasn't sort of like shown a whole heap of like full commitment back to the upside. Of course, yes, it is moving up, but it's just this slow grind up. It's not like one of these kind of moves where the bulls are definitely in charge and they're just taking it higher. So what I'm sort of looking at the moment, as you can see, I've sort of marked this one out because it's forming a little bit of a sort of flag pattern. And if we drag this back down over here, and depending on where you want to sort of call the high of this flag area here, obviously I've just taken the wicks because they seem to line up quite well. And even this morning on the open, we had a little bit of a push on the Aussie of DXY weakness from overnight, which I'll get to in a moment. But you can see it's just respecting this sort of falling resistance here. We had the confluence as well because of the sort of D1, the sort of daily resistance, and as you can see, price has just got smacked back down, and it's still sort of playing around here a little bit as we speak. It's sort of recovering a little bit, but certainly starting to see a little bit of this grinding sort of flag sort of play out here. So again, the main sort of level for us to beat is the sort of 64.50. I would call that your straight sort of confirmation, but this is minor levels just on the way up here as well. Obviously, we need to sort of get out of this flag. Yesterday's highs of 64.40, a close above this area here gives us a good chance to firstly sort of target this wick, to fill the wick from that Monday session. And then sort of obviously that's the breakout there. But even if we do get this close above the 64 area here, well, I would say sort of like not necessarily just if we get the close above here, but you want to see the close up above here because as you can see, quite a few times it tried to get up above the 64 zone. And if you sort of look at I don't really use the drawing thing so much. You can see it sort of prices come up here and it's just sort of failed down, come up here and just failed down. These times here, it only sort of like just sort of got up and sort of clipped it, which is giving us that good sort of line in the sand. But again, there is always a chance that price could get up here. And if we don't get the close, like a solid candle out the top here, there's a good chance that we just do this and sort of fall down just like we have here and here. So that's what we're sort of looking at in the short term for sort of like a bull sort of case scenario for the Aussie. But as we can see here, it's still finding a little bit of trouble at this horizontal to get back up into this tight little range if you're trading the sort of the horizontals in the range. But 64.40, close above here, 64.50 for confirmation. And then we can sort of start to go, okay, where are our price targets going to be? So take this hole here from the lows. And as you can see, this sort of comes back up and sort of gives us a bit of a confluence because we've got a daily resistance around this level. If we jump out onto the daily here, we can also see that this is the zone that would be taking us up to here. So if we can sort of get back up around here, I would expect, obviously we've seen previously quite a lot of the market sort of want to sell it off here. So we know that the sellers are still sort of hanging around here. They have previously been buyers. As we said the other day, they were buyers back here, buyers back here. So this is the big sort of swing zone here. So as you can see, sort of like from my sort of plan from the weekend, we are getting a little bit of this play out here. As you can see it a little bit better on the daily. We need to take out these wicks. That's yesterday's wicks, that's Monday's wicks, which is the 64 and the 65. 64.40 and 64.50. They're the confirmation levels, and then we can look to push up. And sort of again, a couple little minor zones at 60. But I would expect that we could probably sort of realistically, if we can get the break of the 40 and the 50, sorry, the 50, then this could be a good area that we could expect the price to sort of move to before we see a little bit of a correction. So that's the bull case scenario. Again, you know what I mean, at the moment with this daily, it did have a little bit of a sort of a bearish closed doji. So, you know, and I mean, these things typically tend to sort of lead to a little bit more of a sort of pullback retracement, but we'll have to sort of wait to see sort of what's happening with the DXY and well, basically broader US strength and where risk is actually at the moment. So if we flip on to DXY, we can see that sort of like there was quite a sort of violent sort of sell down. This is, I believe, sort of like due to a leak of the ECB confirmation that they're going to be raising 25 basis points on Thursday. Of course, these things are never sort of fully confirmed, but if you jump onto the lower time frames, you can see that it was already sort of like selling off. Like it had sort of, this was yesterday when we were trying to trade that channel. We saw that reversal, and as you can see, it took off and sort of ran through most of the night till it broke this sort of channel that we can sort of see it was forming here. And you can see this is a good sort of thing where we've got the break level, comes up, retests, and then bang. So it was starting to move down. It was starting to come down a little bit, and with a bit of a grind, obviously, just back and forth through here. But I believe that this is around sort of the 6 o'clock period is when that sort of report sort of came out, or leak came out, however you want to put it. And you can see the market reacted quite strongly. And obviously, because Euro makes up such a large percentage of DXY, DXY is going to be very sort of impacted, sort of like from that kind of news. So it's obviously had a bit of an effect. And on Asia Open, we saw a little bit of a gap up here. It wasn't much, but still we're sort of seeing we have. So I guess that would have been the open. There was only three points, so quite small. Closed it straight away, and we're actually seeing a continued push to the downside here. So be interesting if we can take out yesterday. That's the close around this zone here. But if we can take out yesterday's lows, which is the bottom of this wick here, then I think that'd be a nice little confirmation for the downside. A little bit more with DXY. Because certainly sort of that's quite a sort of ugly looking sort of almost backtest style kind of top wick for DXY there. Again, I don't think DXY is sort of completely finished, but I do believe that we're in a little bit of a sort of corrective phase for sure, given a couple of factors. Of the sort of like higher resistance and the breaks of the channels. And as I said on the weekend video, that I sort of thought this DXY sort of USD weakness was going to be coming through this week. And we can certainly see it playing out so quite quickly at the moment. So a couple of things though, we do have US CPI tonight. So let me just pull it up. I think they were 3.2 to the best of my recollection. So yeah, so the year-on-year US CPI 3.2 previously, and it's tipped to come in at 3.6. So that's actually sort of looking for the first time to have a bit of an increase for at least the last couple of months. I think I'm just having a quick look over. Yeah, it seems like they've sort of beaten downside, so cooler numbers and that each time for the last 5 months. So that'll be interesting if that comes in a lot hotter, because that's obviously sort of showing that, you know, inflation's still sticking around, being a little bit sort of sticky, even though they're in the ballpark. I can't remember what they tipped out at, 7 or 8% or something like this, and they've driven it all the way back down to sub. I thought it came in 2.9, maybe it was revised or something like this, but still 3% or 3.2. Oh no, here we go. Yeah, 3% in July. 3.2 in August. So it's sort of like hovering around this level. So if they can't sort of drive it into that last little bit, there's a higher chance, obviously, they're just going to sort of use whatever tools they have, which is basically just crank up the rates again. And you're going to see USD strengthen up a little bit. But you got to keep in mind that you also got ECB 24 hours later, and they've been tipped to sort of raise by 25 basis points. But given this leak or report or whatever it was, um, it's looking like a high likelihood. I don't have the sort of numbers in front of me, but it was something I think sort of like 40% were tipping or 49% were tipping. It was going to be a 25% base point raise, and that sort of shot after this leak has sort of shot up to around 68 or 69%. So the market's certainly pricing in ECB sort of actually raising rates, and CPI is obviously a great indicator, but the actual rate decision's the holy grail. So the CPI is a sort of your two tier, second tier, um, only after sort of the actual rate decision being the tier one sort of bits of news and data. So yeah, if we do get a push on US, basically, yeah, in short, if we do get a push on USD, there's a high chance that it may be sold into, and we could actually see a further sort of commitment to the downside. So as you can see on the daily, we've still got this sort of RSI sort of well pointing sort of down with the DXY, and if we can sort of try and pick out some levels, even just on this last push. We're still up above the 38 at the moment. Around this sort of 104 level, you've got the 104, it's a solid number. You've obviously had a little bit of sort of resistance around here previously, a little bit of support on the way up. So I reckon 104 is probably a reasonable target for this sort of downside move here for DXY, just at least in the short term. Okay, flipping onto gold. So gold had a bit of a disappointing night overnight. As we were saying yesterday, it's in this sort of little battleground that it sort of had previously sort of been dealing with on the way up. So it's interesting. I'm not completely writing off gold here. Of course, as I said, with the potential sort of DXY weakness due to other factors and that as well, there is a chance that we could get a little bit of a recovery here. In the short term, I don't like the fact that we had this was 16 was our sort of solid support here, and then we've obviously closed down here, and that's your little zone, and you're breaking it down. What I am giving it a little bit of a pass for just at the moment is more this. If we get these ones out of the way, clean this up a little bit. What I am giving it a little bit of a pass for is this support zone here, albeit sort of like technically, under, so what's that, 10 ticks or something. I'm giving this a pass, or not giving it a pass at the moment, but I'm sort of saying that sort of like, I'm not confirmed that it's coming down. This isn't really this is more just a show in a trend direction. Underneath 1907, I'll take that as confirmation. I'll take that as confirmation for a sort of move to the downside. What I am sort of saying is that sort of like where we had sort of support here on the way up, it is still coming in around this zone here. So we have still got a little bit of support here. We've obviously come back here, and as sort of like the 61% is very strong level with the sort of fib retracements. As we can see, even with this down move here, we came back up, clipped that 61, and that was the top of this move. And we've come down here. Now we're finding if we are sort of looking the other direction, so we can get this one off for now because we're not playing with that. We're hitting the 61% here, and it's trying to hold this zone as well. So realistically, I'd want to sort of see it back up above 22, or at least touching up 22, and then closing near the highs to sort of say that this is a bit of a sort of just basically a fake out. So this will be your sort of zone here. So certainly a close back up in this zone, but obviously higher the better. But I would like to see back up around 22 to sort of say, okay, this is actually just a little bit of a sort of a hit the last little stops before we can move back up. Because as we know, sort of gold loves to sort of just shake people out before it actually does its move. But that's time will tell. And obviously, if we take out this wick from yesterday, then we know that we're definitely going down. And then we're going to be looking around these, so probably around 1900, 1897 at least. And if we sort of, still want to sort of have enough pressure coming down, particularly if the US dollar does run, then we're going to be looking at these sort of support levels around the sort of 1890 level. And realistically, let's hope that that holds. But as we sort of see at the moment, we are sort of starting to sort of tip down to the downside here. But I think today's session will gives a bit more of an actual confirmation of whether we're going to pop back up into this and just range a little bit more, or if we take, as I said, if we take out that wick, then we're sort of going to continue moving sort of to the downside. Let's have a quick flip across to copper. So, yep, copper. Look, as I said, over the weekend, I was looking for a big of a move back up over here. Obviously, it's had quite a nice day on the Monday. I wouldn't write it off yet. It's only hit the 38% on this. We'll probably see it a bit better on the lower time frame. Yep, 38%, pretty much hit to the cent, and popped straight back off. So, it doesn't mean that we're out of the woods. It doesn't mean that it's okay, it's 38%. We still want to sort of see then a new high. But if you can muster a rally from the 38%, that means that the bulls are definitely, the people are buying those dips quickly. They're not allowing people to sort of take profit. These sort of deeper retracements are just showing that sort of like, there's a little bit of a weakness coming into that trend, but 38%, bang, they're prepared to give it another go. If we can get a close, this is on the 4 hour. Where do we have? So if we can get sort of like, a punch up here, close above these previous candles where we've seen, prices tried to move here a number of times and just rejected. Very similar sort of with the Aussie at 64.40. We had those attempts to go over it, and then the last ones were just a little bit more feeble, came up and clipped it, but weren't able to really sort of attempt to push onto the top side. And obviously then bang, price rejected down quite hard as well. So yeah, close up above 60, still stuck on the Aussies. Close up above this sort of 380 level, possibly with a back test, and then above whatever high it could make with a closeout here. Then that's where we're going to call the confirmation of the move. Topside target again moves up to this zone here, which I sort of mentioned over the weekend. This is where we know that sellers have been quite a lot previously. And so I would expect that even if we do get this pop through this level here, this is going to provide quite a bit of a sort of heavy resistance for sort of price sort of moving forward. On top of that, of course, we've got the big sort of triangle that we've been talking about, but yeah, this isn't really sort of a factor right at this point because we've got these sort of minor levels to get through first, of course. China, again, see China sort of came down hard. As you've sort of seen on the charts, I've sort of been saying I've been very sort of adamant that we're going to be seeing more of a downside move. Particularly sort of with this bit of a, sort of to me is a bit of a rising wedge, sort of coming up a little bit higher. Obviously we didn't quite get to that one there, so I almost sort of put this and replay it a little bit and sort of say that this is a bit of a rising wedge for us here. Back to main trend, that's still my sort of price target that I expect to sort of see hit up. But of course, the longer that it holds up around these zones, the higher that actual sort of main trend comes. And if they can't sort of break this and they use this as a launch pad while it's sort of up around these all-time highs, then I'd say the yuan is in trouble. And certainly if we see a bit more of a sort of like, back and forward along like this before, and then it sort of hits here, and then we've got sort of this sort of basic support zone here, where you can see that sort of like, previous resistance, buys. You've got the people that have been waiting for this trend. You've got the people that have obviously also been buying around these zones and valuing it here. If we don't get here till say November, like so if it can hold this zone, through till November, and then you get the buyers coming in there, you're going to have two large portions of the market that are happy to buy it from this zone, from this sort of 726 area. I'd imagine that that is going to give you a big breakout then. China certainly on a fundamental level is looking weak. US dollar is still certainly the number one thing in charge. So it's yeah, it's I would say that sort of like unless they can really sort of get down underneath this horizontal earlier, and then sort of find that they can sort of bring this back down a little bit sooner, say by end of September, obviously only 2 weeks or so away, or maybe even October. I would say that's where you want to sort of get it if you want to sort of see a bit more of a range through this area. Because if they sort of can hold it at this zone here, it shows that nobody's taking profit, nobody's caring about sort of, China and that, and so the yuan, whatever you want to call it. So yeah, they need to punch it down sooner rather than later. If they can't do it through till say November, then I expect that'll be the catalyst to see major breaks. But I don't see this moving to sort of 750 anytime soon. As I said, if we sort of continue this out here, I still think this immediate wedge is in play. And yeah, we're just going to have to sort of wait and see how that goes. If we have a quick look, this is probably a little bit of sort of wishful thinking, or not necessarily wishful thinking, because I don't really care too much about one, but yeah, certainly, yeah, it gives them some interesting targets to the downside there, but yeah, I'm not really too confident in that lot there, but certainly I think this wedge is the main play with China at the moment. Beautiful. All right, and that's about it from me for today.